Okay, so
I feel like I'm on the Today Show.
ready to talk with our first industry guest, Lori Nelson, to talk about money, money, money. Money! Hi there, today is episode 4, and today is my first industry guest, Lori Nelson with Citizens Bank, and she's here to tell us a little bit about what it takes to get financing to buy your home. And I get a lot of questions, especially with the first-time home buyers, as to what they need to do in order to get financing. One thing that is extremely important is the pre-approval process, and that is basically where you need to start. And Lori's going to tell us about the pre-approval process, the steps that you take, and what it's all about.
We're going to do a quick snippet on pre-approval because it is the most important process when you start looking. A pre-approval is what allows you to make an offer on a house.
And it has to accompany your offer, right?
It does. But I think, personally, more importantly, a pre-approval is your opportunity to collect information, to take the mystery out of the numbers, to know with confidence what you can and can't afford, to know your options, to know what is the minimum down, what is my rate and payment going to look like at this price point. Oftentimes people have a big swing of price points. They might say, I'm looking between $250 and $350. Mm-hmm. That's huge. So what I would be able to provide is, okay, this is what you're pre-approved for, and this is what it looks like at $250, at $300, and at $350.
Not only at closing, but also your monthly payments,
right?
Right.
So a pre-approval gives you a bit of a benchmark. So when you're looking at homes, you already have an idea in your head of exactly what it's going to cost you. And there are obviously a lot of websites and information on the internet that make your payments and down payments look really attractive. I would say steer away from that.
Too good to be true.
Yes, and don't, make sure that your pre-approval comes along with a very detailed account of what you're expected to bring to closing, and not just you're pre-approved for 5% down, here's your letter. Okay. You have to have more information.
But I want to ask you this question. So you said 3% down, conventional.
Correct.
You can get a conventional.
As a first-time home buyer.
Okay, as a first-time home buyer. What is FHA, and what do you need down for FHA?
FHA, the minimum down payment is 3.5%, so there's not a huge difference. There are definite differences between the product of a conventional loan versus an FHA loan.
Which is stronger? Which is better? If I was the seller, what would I want to see?
I think sellers tend to favor a conventional pre-approval over an FHA. There's a little bit of taboo about the FHA appraisal. There are some safety-related requirements during the appraisal process, and that aren't there necessarily with conventional. I think they're both great loans and ways to get your foot in the door without putting a lot down. But in general, I would say a conventional pre-approval would be favored in most multiple offer situations. And I direct that question to you because
I would absolutely agree with you. I would absolutely agree with you. But if you decide to go down the road with an FHA mortgage, you can certainly find a home and a seller that will accept those terms. When inventory is low, though, we look at who's your strongest buyer, how much are they putting down, what type of program are they using, what's going to be easiest to close, all those questions. And people always say cash is king, but if you have a strong pre-approval, if you're a strong buyer, I think you look beyond just cash or financing. There's other terms to keep in mind, right?
Yes. And if I could jump in here and just give a little bit of plug for a product we do have at Citizens Bank. I would say I've done less FHA mortgages in the 6-7 months I have worked here than I have in my last 15 years because of the first-time homebuyer programs that we have that are conventional.
With only 3% down.
With only 3% down, and in some cases you can get closing cost assistance up to $3,000, and in some cases we have no PMI loans with as little as 3% down. Okay. So if if that's something you qualify for, it's helping first-time homebuyers win multiple offer situations.
What is a base credit score that you would need to have to get pre-approved?
Okay, so because there are so many different types of loans, there is a pretty good variety of credit scores. Conventional credit score, typically the minimum is a 620. An FHA target credit score is probably 600 to 640. There are some programs out there for credit scores less than that. The target credit score to have, like the best tier in terms of a conventional loan, would be 740.
And does your credit score affect your interest rate?
Your credit score doesn't affect your interest rate as much as people, I think, assume it does. I do think that the bigger factor that your credit score plays a role in is if you don't put 20% down, it does play a big factor in your mortgage insurance, which is called PMI.
That was our next question. What is PMI?
Okay, so private mortgage insurance is basically a charge that the banks have if you don't put 20% down. And that's basically just because you're considered to be a higher risk if you don't have 20% down. For a conventional loan, you can do as little as 3% down, and then anything beyond 3% up to 20% would include mortgage insurance. Mortgage insurance is based on three simple things: your credit score, your percentage down, and your loan amount. And those three things will determine how much your monthly PMI will be. So the higher the credit score, the lower the factor for PMI. And I think that, that can play a big role in your monthly payment. So
I know as a realtor, speaking as a realtor, experience is extremely important when you find someone that you click with, you want to work with to find a home. Is experience important in lending?
Oh, absolutely.
Okay.
Absolutely. I mean, yes, absolutely. I think that, this is one of the biggest things you'll ever finance in your life. You want to make sure you're talking to someone that has lots of experience and confidence and is there looking out for what is best for you. What is the most affordable mortgage option for you? There's oftentimes more than one. People think they're just going to, finance one certain way, and oftentimes they find out about some alternatives. And, you want to know when you make this decision that you've been provided with every option possible, whether it's to make your offer look stronger or it's just a trick to help you avoid higher PMI. There's so much involved.
And do I have to stroke a check to talk to you?
No, you do not.
Oh, that's good.
Information is entirely free.
Okay.
Before we agreed to this interview, I said I will not be singing.
But I wanted her to sing.
I won't do it, but Dawn, you're going to have to
And I'm going to
sing.
sing, money, money, money.
That's why I'm not singing.
Money! Okay.
Cut.
Yes, sir. Okay, I want to thank Lori Nelson today with Citizens Bank for joining me. It was extremely informational, and there's a lot that we didn't touch. Feel free to leave comments, text us, call us, leave comments. Like I said, we're happy to continue this conversation.